Okay, right. So guys, a very good evening to all of you. We will start off in 3 minutes time. Okay. Okay, right. So guys, last week we looked at consolidated statement of financial position. Today, guys, we will be doing a recap on consolidated income statement. So first of all, guys, I'll quickly go through the basics and then we will start doing the revision kit questions on income statement. Right. Now, guys, to be very frank, when compared to what you can say, the SOFP, income statement is quite easy. It's very straightforward because you can get maximum 2 or 3 adjustments only. Okay. So I will teach you the basics of the consolidated income statement, but what we will do is, guys, we'll quickly run through these adjustments. Now, I think these adjustments, I have shared it in the WhatsApp group, the Telegram group. Just in case if this is not there after the class or maybe tomorrow, guys, I have some free time, so I'll be able to share this short note with you. So this is the only thing that you need to study for the exam in terms of theory, okay, in terms of adjustments. So guys, over here they are telling, or the short note says, when you do an income statement, set up the group structure. So that one, guys, we know, like who bought whom, what percentage, how many months, you have to consider that. Right. Then, guys, step number 2, you have to consolidate income and expenses line by line. Okay. That means like last week, now assets and liabilities, how did we guys handle? We took the parent asset, added with the subsidiary asset. Same concept. When you do an income statement, parent income is added with the subsidiary income. Parent expenses is added with the subsidiary expenses. So that's how, guys, you have to consolidate income and expenses. Simply add both and show. Right. So normally, guys, in the paper, if income statement is tested, 100% I can confirm that these 2 adjustments will definitely come. One adjustment is called intra-group sale and purchases. That means, guys, one company is selling stock to another company. So what do? We eliminate it. Okay. So when one company does sales with another company, we call that as intra-group sales and purchases. So what we guys do, we eliminate them. So for one company, it is sales, no? So we reduce it from sales, deduct from sales. For another company, it becomes purchasers. So normally, guys, purchasers is inside cost of sale. So therefore, guys, from cost of sale, we deduct it. So this is going to be the double entry. So just like the short note, what I showed last week, my short note will include both the double entry as well as what to do, whether to add or whether to subtract or whatever, it will include that. So guys, this is the first adjustment that you will always get in the exam. If it is an income statement, what is that one? Intra-group sale and purchase. So for one company, it's a sale, reduce it from sales. For another company, this will become purchasers. So what you do, guys, you reduce it from purchasers also. So normally purchase is inside cost of sales. So you subtract it from that. Right. Now, guys, remember one thing. Always an intra-group sale and purchase is followed by a URP adjustment. Now, when you do SOFP, you only have URP adjustment, unrealized profit. But guys, when you do the income statement, you have both intra-group sale and purchase followed by the URP. So guys, when you do both, you need to know what are the adjustments. When you do SOFP, you only have to worry about the URP adjustment. But when you do the income statement, you have to be, guys, worried about both the intra-group sale and purchase followed by a URP. Now, guys, last week we discussed how to calculate URP, so same concept. So once you have calculated, guys, your URP, what you are going to do, you are going to add it to your cost of sale. Is that clear, guys? I will explain why are we adding it to cost of sale. What's the reason behind it? But anyway, guys, bottom line is that any unrealized profit, guys, we have to add it to our cost of sale. Okay. So once you have, guys, added that to the cost of sale, that's it. That's all what you have to do when it comes to unrealized profit. Calculate it and add it to cost of sale. So I'll tell you why only one we are doing. Only why we are only adding it to cost of sale. That's it. All right. Okay, so guys, first of all, you need to just know about these two, because if you are familiar with these two, we can start the exam kit question. So guys, number one, intra-group sale and purchase, what should we do? For one company, it's sales, reduce from sales. For another company, this is purchases, so you have to reduce it from cost of sales. Then URP, you sit down, you calculate your URP. Once you guys calculate your URP, what should you do? You have to add it to your cost of sale. Add it, that's it. And also, guys, sometimes in the paper, they might ask you to calculate NCI profit separately. So this is how you normally calculate NCI profit. There's a separate equation for that. We will discuss the equation. Right. Okay. One more small thing, guys, that you need to learn or that you need to go through before we start the question. Right. First of all, guys, can you please spend around 2 minutes time and read this? I will explain what we are going to do over there. Right. Can you guys quickly read this part, guys, over here faster? So just read, guys, from here to here. Okay. That's enough. The highlighted area. Okay, right. So guys, now have you gone through? Right now, guys, remember sometimes now these two 100% sure I can tell if in section B, if income statement does come, definitely you will get these two. Right. Now, guys, over here, it's like this. Sometimes transactions can take place between parent and subsidiary. These are the common examples that I have seen in questions. So far, this was tested in one exam kit question. This one, guys, I saw it in the textbook. This one, not yet tested. I didn't see a question, but what I want to tell you is this. When transactions happen between parent and subsidiary, think of the transaction, guys, in both point of view and you eliminate. That's what you have to do. Now see, now this intra-group sale and purchase, guys, we look at the transaction from both parties' point of view, right? From one party's point of view, it's sales. So we remove from sales. From another party's point of view, it's purchasers. So we remove from purchasers. Okay, so like that, guys, when these transactions happen, don't worry, I'll show you a question. You look at the transaction from both parties' point of view. And then you eliminate that from your income statement or from your books of accounts. Right. So guys, for the time being, we will start off with a small question where we are going to discuss on this. You can clarify, guys, any doubts that you have after that. Right. Okay, now guys, I'm going to do a question from the exam kit. I shared the exam kit soft copy last week in the group. You can check on that one. We are going to, guys, do a question called Patty and Selma. Right. So guys, remember, don't worry about the format. Normally, guys, format in the exam will always be provided to you all. Okay, so guys, this is the question that I'm planning to do from the exam kit, right? Question number 10, Patty and Selma. Okay, first of all, guys, don't worry. Like I said you just now, the format will be provided in the exam. Here, guys, just like this. They will give you the entire thing. Your responsibility is to simply note down the numbers. Like in cash flow statement, guys, the entire format will be given to you. You just have to enter the numbers one by one. That's it. And there are some occasions where you will have to do a selection. See, guys, item number 1, item number 2, item number 3, guys, there are areas where you will have to make a selection. So we will discuss about that one later. First, we will see how to do a full question, because guys, like this, the way that the FA exam and the FR exam is set up is in two different ways. So I will teach you the whole question as well as the NCI profit. So that will lay the foundation for you for FR. Then over here, then we will focus what the FA exam is asking, and we'll quickly, select our options and finish it off. Okay. Right. So guys, let's have an income statement ready. Also, guys, once the class is over, I'll share this worksheet, what I'm using. And also, guys, let's have the NCI profit working ready. Okay, let's have that part also. Okay. Now, guys, what you do, first of all, guys, you have a look at the question. So, guys, remember when you do an income statement, what is step number 1? Step number 1, guys, will always be you have to understand the group structure. Is that clear, guys? Always you have to understand the group structure, who bought whom, and how many months, whether it's mid-year or whether it's full year, like that, guys, you have to decide. Okay. Now, guys, read this sentence and read Roman number 1. And can you guys quickly decide, make it in your mind, who bought whom, what percentage, how many months? Can you guys first of all decide on that one, guys, quickly? Okay, so guys, have you done that part? So guys, what's happening over here? Patty acquired 70% of Selma. So the group structure, guys, will be like this. Okay, number one, P acquired, right, 70% of S. Okay, right. So therefore, guys, if Patty, guys, acquired 70% of S in the sense, how much percentage is remaining? How much percentage, guys? 30% is remaining. Exactly. So 30%, guys, we consider it as our NCI. Okay, now, guys, you have to be careful. Look at the date. 1st of May 2001. Question is finishing on December 2001. Same year. Right. Now, guys, can you start counting then how many months they have acquired? So let's start then. May, June, July, August, September, October, November, December. So guys, we bought the company only for how many months this year then? 8 month. So this is a 8-month subsidiary. Done. Okay. So this will become, guys, an 8-month subsidiary. Done. Right. So guys, are you okay with that part? So always, guys, first of all, understand the structure. Who bought whom? What percentage, how much is left, as well as, guys, you have to quickly decide how much percentage is, guys, remaining. Okay. So in our case, guys, over here, as you saw, 8 months subsidiary. May 2001, December 2001 means they bought the company in the same year, no? So when you buy it in the same year, you have to only take it according to the number of months. So therefore, this is a 8-month subsidiary. Okay, now, guys, once you have understood that part, you need to now start copying the numbers. You need to consolidate line by line. Okay, so how to consolidate, guys? Like this. Take the parent revenue. Okay, see for an example, guys, Patty revenue 987. Okay, so mark that one. Plus subsidiary revenue, which is 567. And now, guys, remember, these are how many months subsidiary? This is a 8-month subsidiary. So therefore, subsidiary amount, you have to put 8/12. Understood, guys? Remember, guys, this subsidiary, you haven't owned for the full year, right? You have owned them for only how many months? Only 8 months. So their income and expenses, only 8 months, you can take it into consideration. After this only, guys, you should start doing all your adjustments, not before this. Don't do the adjustment and then put 8/12. That's completely wrong. First, you take the parent one fully. Subsidiary one, when you're adding, take it according to the number of months in this case. After that only, guys, you should start doing all your adjustments. Clear, guys? Okay, cost of sale. Right, let's copy that and show, guys, over there. 564 plus 336, that into 8/12, because that's an 8-month subsidiary. Right, gross profit. Guys, gross profit, you should not copy because we only should calculate that one. Understood, guys? Sales minus cost of sale. Right. Administration expenses, same story, guys. Just copy 223 plus 123 into 8 divided by 12. Right. Operating profit. Normally, guys, operating profit, we don't copy. We calculate that and take. Finance cost. Okay. Mark that and show, guys, over there. So finance cost is 50 plus 30, but 30 must be multiplied by 8/12. Profit before tax. Don't copy. Taxation. Yes. Copy down that one. 40 plus 24 into 8 divided by 12. Profit for the year or group profit, don't calculate. Don't copy. We only should calculate that. Right. So again, guys, quick summary. Step number 1, you understand your group structure. Step number 2, copy the income and expenses. Subsidiary ones, if you have to put it to the number of months, please do so. Mark it with the number of months. All okay? Right. Now, guys, what we will do now, let's start reading Roman number 2, our adjustments. Right. Can you guys quickly go through this part, guys, faster? Okay. So, guys, have you read that one? During the post-acquisition period, what does that mean? After buying? after Patty bought Selma, Patty sold goods to Selma for 120. Stop at that. Right? So guys, what's happening here? One company sold goods to another company. This is what we call intra-group sales and purchases. Understood, guys? When one company sells products to another company, we call that as intra-group sale and purchase. Okay, now what should we do with that one? We should eliminate. That means, guys, now think, Patty sold, no, that means for Patty it's sales. So go to sales, which is revenue, eliminate minus 120. Sold goods to Selma. That means, guys, for Selma it's purchasers. So normally, guys, where is the purchasers kept? Purchasers is kept inside cost of sale. So go to cost of sale and remove 120 from that also. This is how the intra-group sale and purchase is adjusted. See, guys, pretty straightforward. For one company, it's sales. You deduct from sales. For other company, it's purchasers. Since purchasers are inside cost of sale, remove from that also. Right? Can you guys little bit check and see? Are you guys okay with the intra-group sale and purchase, guys? Any doubts that you have? Because I want to move to URP now. I think that's easy, no? If you have a doubt, but don't hesitate, just tell me. Okay, now guys, like I said, you don't forget, always when there is an intra-group sale and purchase, what will be the next adjustment always? The next adjustment, guys, will always be URP, exactly, unrealized profit. See, guys, including a markup of 20%, 1/4 of these remained in the inventory at the year end. There you go. That's a URP adjustment. Now let's start doing, guys, the URP adjustment. Okay, so let's see what's happening, guys, over here. So normally, guys, how do you calculate URP? Profit into inventory held. 1/4 remained in the inventory. All right. Okay. I think that's correct if I'm not wrong. Okay. 5,000 should be correct. Okay. So guys, then let's calculate that part then. Inventory held in our question, inventory held is 1/4, 1/4. Okay. Now guys, in this question, it's a markup. Markup is profit percentage. So first let's write that over here. Done. Okay. Now guys, remember if it's a markup, out of these two, it's the cost that is the 100% factor. Is that clear, guys? Normally, if it's a markup, then cost is 100%. That means here, guys, selling price should be how much percent? Then it has to be 120%. Then only know, guys, you will get 20%. Okay, now let's start doing the calculation. How to do the calculation? Right. Patty sold goods to Selma for 120. That means 120,000 is the selling price. So selling price is represented by 120%. Now guys, divide by 120. You're looking for profit. Profit is how much percent? 20%. So therefore, guys, what you do, multiply by 20. And now can you check your answer? Okay. Right, so guys, 120,000 divided by 120 multiplied by 20, answer is going to be, guys, 20,000. So what is this 20,000 called, guys? 20,000 is profit. So let me, guys, mark it over here. 20,000 is the profit. Now profit into inventory held, answer, guys, will become 5,000. Yeah, the URP is correct. Okay, now guys, before I go into the technical part, can you check and let me know, are you clear with the term URP or how I calculated URP, guys? Are you all okay with that part? Little bit check and see. Okay, so same like, guys, all are okay with the URP calculation. Right now, guys, listen carefully. It doesn't matter who sold to whom. Parent can sell to subsidiary. Subsidiary can sell it to the parent. It doesn't matter. Always once you get the URP answer, go and add it to cost of sale, right? Can you guys go and now add 5,000 over there? So remember guys, when you do the income statement, regardless of the seller, once you do get your URP, simply add it to cost of sale. Why are we adding that to cost of sale? Now guys, let me show you the reason. Let me explain. Okay, all good, right? Now guys, listen, last week we studied like this. If parent sell to subsidiary for URP, what's the double entry? Retained earnings account debit, inventory account credit. If subsidiary sell to parent, what's the double entry? Retained earnings debit by percentage, NCI debit by a percentage, and inventory will become credit. Okay, now guys, look at this value. When parent is selling to subsidiary, retained earnings account debit, that you don't worry. Why? Is retained earnings part of this side? No, guys, retained earnings is part of the SOFP. So this part you don't have to worry. Inventory credit is what we are doing over here. Now you must be thinking inventory credit means how can the cost of sale increase? I'll come to that point, guys. I'll come to that point. Don't worry. Right. Next one, guys. If subsidiary sell to parent, retain earnings debit, don't worry. Retain earning is not part of the income statement. NCI debit, guys, we will be doing it over here. Inventory account credit is the one that we do here plus 5. Now the next big question. Okay, so guys, see, these are double entry. When parent sell to subsidiary, retain earning debit, that no need to show. Inventory credit, that's why we are adding. If subsidiary had sold to the parent, retain earning debit, no need to do. NCI debit will happen here down. Inventory account credit only, guys, what we are doing here. So guys, remember bottom line, no matter who is selling to whom, in the income statement, URP is always added to cost of sale. Simple as that. Okay, memorize it, guys, now itself. No matter who sells to whom, under the income statement, URP is always added to the cost of sale. So we are adding to the cost of sale because of this. See, when parent sell, inventory credit. When subsidiary sells, inventory credit. Inventory credit means, now guys, listen carefully. Inventory credit means inventory is reducing. Understood, guys? Inventory is asset, no? When an asset gets credited, that means the asset is reducing. When the closing stock is reducing, our cost of sale will increase. Because of that only, we are adding to our cost of sale. Okay, so inventory credit means what, guys? Inventory is reducing. So inventory is inside cost of sale, no? So what will happen when the inventory drops? Our cost of sale will go up. So cost of sale going up only, guys. We have shown it over here as plus 5 over here. So let me guys quickly summarize it one more time. URP, once you get your answer, no matter who sold to whom, what's the solution? Cost of sale is added. Why is the cost of sale added? Because when both parties sell, inventory is credit. Here also inventory is credit. Inventory credit means inventory is reducing. When the inventory reduces, cost of sale will increase. So cost of sale increasing only, what we are showing guys over here as plus 5. Now, guys, do you understand my short note on why when there is a URP, we simply add to cost of sale because of this particular reason only. Okay, right. So, guys, can you just spare me 1 minute time? I'll quickly be back. And yeah, Adil, I think you have a doubt. You can send it over. I will explain that also. All right, okay. Right, okay. So guys, then with that one, we are done with the URP adjustment also. So with that one, guys, now we can quickly finish off this question. So guys, remember, quick recap one more time. Intra-group sale and purchase, how to do when one company sells to another company, reduce from sales, reduce from cost of sale. Are you guys okay with that part? Reduce from sale, reduce from cost of sale. One company sale, one company purchase. Okay, next one, guys. From the second part, URP. First, guys, you sit down and you calculate URP. Once you calculate URP, just remember, no matter who sells to whom, our solution is what, guys? No matter who sells to whom, cost of sale is added. Why is the cost of sale added? Because of inventory becoming credit will result in cost of sale increasing. That's it, right? Now let's, what you can say, guys, now let's quickly now close this equation, and now I'll teach you how to answer the questions which are in the exam. Okay, the requirements, what they have asked. Okay, now guys, let's start calculating this one then. Let's see. 987 plus 567 into 8 divided by 12. That one, guys, minus 120. Then the answer, guys, will be 1245. Right. Now, guys, let's calculate the cost of sale then. Right. 564 plus this one, right, minus 120 plus 5. Answer is, guys, minus 673. 673. Done. Okay. Now, guys, let's calculate the gross profit then. 1245. Guys, you also little bit double check whether my answers are correct now, the values. Right, next one, guys, administration expenses 223 plus 123 into 8 divided by 12. Right, answer is, guys, 305. Okay. Next one, guys, let's get the finance cost then. 50 plus 30 into 8 divided by 12. That's 70. So gross profit minus administration expenses will give me operating profit. So 572 minus 305. That's 267. 267, guys, minus 70 will give me 197. Right now, guys, let's work out the taxation then. 40 plus 24 into 8 over 12, which is going to be, guys, 56. Tax is normally deducted. Then deduct that from 197, guys, your answer will be 141. So this is what we call group profit. Again, guys, remember for F3 or the foundation level, what you need to, guys, understand is that some of these answers, they won't ask. But the reason why I'm doing and showing it to you, like I said earlier, to lay the foundation for your next level. Because of that only, I'm showing you how the entire income statement part is done. All right, wait, let me check on the cost of sale. And yes, guys, one more time, I'll go through the URP adjustment also. Right, 564 plus 336 into 8 divided by 12 minus 120 plus 5. Wait, guys, one more time. 564 plus 336 into 8 divided by 12 minus 120 plus 5. Okay. Right. So, guys, I think this one is okay. Let's check and see. Right. So, guys, wait, let me double check whether my final answer is correct. Yeah, that's okay. So, guys, these then the group profit, which is going to be, guys, 141. Okay. Now, guys, in your exam, they might ask you maybe in section 8 to calculate NCI profit. Right now, guys, look at the equation, what I'm going to use. When calculating NCI profit, first you need subsidiary profit after tax in Q. What does that mean? Question. Subsidiary is profit after tax in the question paper. So this subsidiary, no guys, subsidiary's profit after tax in the question paper is 54. But guys, you have to be careful. Is it a fully a subsidiary? No, no guys, only 8 over 12. So multiply this by 8 over 12 because guys understand 54 is the profit for the year. No, we haven't owned it, no guys, for 1 year. We have only owned it for 8 months. So therefore, you have to see that into 8 over 12. Now, guys, don't forget, what are we calculating? We are calculating NCI profit. So therefore, you put the NCI percentage. So the NCI percentage is, guys, 30%. Right. Now, guys, can you get that answer then? 54 into 8 over 12 into 30%. Answer, guys, will be 10.8. Minus unrealized profit, 0. Okay. Now you must be thinking, there is an unrealized profit. No, why aren't we taking it over here? Guys, listen. Unrealized profit when who is the seller? When the subsidiary is the seller. Guys, in my case, who was the seller? Patty sold to Selma. Parent sold to subsidiary. Guys, now think. If parent sell to subsidiary, what's the double entry for URP? Double entry for URP will be retained earnings account debit and inventory account credit. Now in this question, what happened was this. Retained earning debit, that no need to do. Why? Because retained earning is not inside the income statement. No, guys, retained earning is inside the SOFP. So you don't have to worry about that impact. Inventory becomes credit. Inventory becomes credit only, guys. We are writing it here. +5. Okay. Why are we writing +5, guys? Once again, inventory credit means inventory is reducing. When our inventory goes down, our cost of sale will increase. Can I show you an example? Here, guys, look at this part. Will you assume opening stock is 100, purchase is 500, closing stock is 200. Now, what will be your cost of sale? Cost of sale, guys, see, opening stock is 100, purchase is 500, then that's 600 minus 200. Then, guys, answer will be how much? 400. Okay, now, guys, take another example. Opening stock is 100, purchase is 500, closing stock is 50. Okay, now, guys, then what will be your cost of sale? So the cost of sale, guys, will be 600 minus 50, 550. Okay, now, guys, can you see evidence? When the closing stock went down, closing stock from 200 became 50. Can you see? When the closing stock, guys, goes down, what's happening to the cost of sale? Answer, cost of sale is going up. That only we are doing over here. Can you see? Retain earning debit, don't worry about that because it's not going to impact the income statement. Inventory becomes credit. So inventory credit means inventory reduces here, guys, like this. From 200, it went down to 50. When that happens, can you guys see our cost of sale is rising? So cost of sale then should be increased. That's why I am increasing to my cost of sale. Now coming back to the point, if parent sell to subsidiary, can you guys see, is the NCI getting affected? Now see, guys, if parent sell to subsidiary, this is a double entry, right? Retain earning debit, inventory credit. Can you see? Is the NCI getting affected in any manner? No, that's why here it's 0. Unrealized profit must be marked here when the subsidiary is the seller. If Selma had sold, then NCI gets affected. But in this question, guys, who sold? Patty no sold. When Patty sells, when the parent sells, it's not going to have, guys, any impact on the NCI. Look at the double entry. NCI is not mentioned. That's why the answer is 0. So therefore, guys, 10.8 minus 0, NCI profit is 10.8. We take the 10.8 then over here. Right. and remove this from our total profit. So then guys, it's like this. Group profit is 141. From that, NCI takes 10.8. So when the NCI is taking 10.8, how much is left for the other people? 141 minus 10.8 to NCI, 130.2 is left for our parent. Group profit means, guys, parent profit plus subsidiary profit. From that, NCI will take his share. The rest of it is available to the parent. This is how, guys, we normally complete a full income statement. Now, for your level, they won't ask you to do all of these. But this is how we normally complete a full income statement related question. Right. Can you guys little bit check and see? Now, don't worry. I will teach you what comes for your exam also. We have to learn that also now, right? We'll answer the revision kit. Okay, right. Now, guys, we will try to answer the question what they have asked from the revision kit. Okay, right. Okay, first thing, guys, they are asking from you, right? Look at this one, guys. This is the examiner's requirement, revenue. So, guys, revenue, what you will do, you will, calculate like this in your exam and type the answer here, 1, 2, 4, 5. Right. Now, guys, next question, cost of sale, item number 1. So, let's look at then, guys, item number 1 then. Right, item number 1. They are asking the working. Now, guys, see 564 plus 336 into 8 over 12 minus 120. Then that is this one minus 120 plus 5. Then this Roman number 3 should be the correct answer. So, guys, when you select this option in the exam, your answer will get updated there. Okay. So, they are simply, guys, asking from you the working. Like, how will you select? How did you get your cost of sale? What was the working behind it? So, okay, no, guys, this working is Roman number 3. Okay, then, guys, coming back to the format. And then, guys, you have to delete the word add because cost of sale is normally subtracting. No? So, delete the word add. Right. Gross profit not applicable. Now, though I calculated, examiner is not asking for you to calculate it. Understood? He is not asking you to do that part. Right. Next one, guys, we have administration expenses. So that you will, guys, type this answer 305. Remove the word add. Operating profit. Now, though I have shown here operating profit, you don't have to show that one. Examiner will not ask for that. Right. Next one, guys. Profit before, sorry, finance cost, item number 2. Now, guys, let's go to item number 2 and then select the answer. Right. Item number 2, select the calculation for finance cost. Now, guys, here can you see how did we get finance cost? 50 plus 30 into 8 over 12. 50 plus 30 into 8 over 12. You select this one, then that will give you the answer. Okay, select the correct working. Okay, next one, guys. NA means not applicable. That means they are not asking you to calculate that one. Like maybe in this paper, gross profit, no need to calculate. So though I calculated here, in your exam, they are telling NA. NA means not applicable. So you don't have to calculate that part. Okay. Right. Next one, guys, when we go up, income tax expense. So income tax is, guys, taxation. So you will copy this 56, you will copy it over here. Taxation. Done. Right. Next one, guys, profit for the year, not applicable. Now see, guys, profit for the year we got as 141. No, here it's not applicable. You don't have to mark it. Right. Non-controlling interest, item number 3. So let's go to, guys, item number 3 and see what they're asking over there. Here, guys, can you see? Look at this part. Right. Now, item number 3, they are not asking you the answer. They're not asking you the value. Now, we did NCI profit and we got 10.8, right? They don't want 10.8. They're asking the formula. Which formula did you use to find the answer? Right now, guys, try to match this one with this one, what you have here on the screen. Right. So, guys, what should be the answer? Let's see. NCI percentage. Okay. So, NCI percentage into subsidiaries profit before tax. Not before tax, guys. We normally go with after tax. Right. NCI percentage into subsidiaries profit after tax. This part is okay. Minus unrealized profit of the NCI share of unrealized profit. So this should be the correct answer. They are, guys, simply asking you, tell us the equation. What is the equation that you are going to use? See, guys, subsidiaries profit after tax into NCI percentage here. NCI percentage in subsidiaries profit after tax minus the unrealized profit of the NCI minus NCI share of unrealized profit. That's how, guys, we get the answer. Right. Are you guys okay with the income statement? Now, guys, do you see your exam is actually more easier than doing the full question? So like how I did the full thing, it won't come in the exam. I'm just teaching you for your next level. But on the other hand, this is how your exam questions will be. You will have to select the equations, the workings, you will have to select. Right. Now, don't worry. We will do another one question and see. Right. Now, guys, so far from what I have explained, are you guys okay? Any clarification that you would like to make, guys, don't hesitate. Ask Philip. I will help you out with the areas. Okay, right. So, guys, since there are no doubts being asked, I will move to my second question and then we will check and see. Right. So, let's go to, guys, another one question then. Another one question, guys. Question name is plate and saucer. This is also, guys, from the revision kit itself. Right. So, guys, this is the question then, plate and saucer. Yeah, sure. Now, in this question, what we are going to do, subsidiary is the seller. So when subsidiary is the seller, I will show you how the URP part is working. Okay. Right. Okay. Now, guys, now can you have a look at, guys, this particular question, guys, over here? Right. Plate and saucer. Okay. So first of all, guys, in your mind, can you quickly set up the group structure, like who bought whom, what percentage, is it number of months, is it full year? Can you guys quickly decide on that part, guys, by reading the first paragraph and this one, guys, quickly? Okay, right. So guys, have you all decided the group structure, right? So guys, how the group structure is going to be then? So it says plate acquired 70% of saucer. So let's start writing guys the group structure then, right? So parent acquired 70% of whom? Saucer. So that means guys, there is a 30% NCI just like the last time. Okay, now guys, look at the date carefully. 1st of January 2000 X1. So assume it as 2021, will you? This is in 2000 X4. That means 2024. That means the subsidiary has been purchased, guys, several years ago. Now, in the earlier question, it was not like that. No, December 2001 question is finishing. Company was bought in May 2001. Then they have bought the company, guys, within the year. Now, this question is not like that. The company had bought this subsidiary in 2000 X1. Several years ago, they have gone and bought the company. So, because they have brought the company, guys, several years ago, this will become a full year subsidiary. So, always, guys, remember when they buy the company at the start of the financial year, or maybe, guys, for an example, if they have bought the company several years ago, it will always be a full year subsidiary. So once you have understood your structure, copy the numbers line by line. Okay, so guys, let's start copying then. So I'll do that for you. Right, so let's start, guys. Revenue, 1,500 plus 700. Cost of sale, 775 plus 370. Right. Distribution, okay. Gross profit, don't copy. Administration, guys, copy. 317 plus 135. Sorry, that's administration. Okay. Then, guys, operating profit, don't copy. Interest. So, interest, I will write it here, 15. Finance cost, guys, let's copy 60 plus 20. Now, guys, can you see? Last time it was a 8-month subsidiary, no? So I put everything into 8/12. This time this is a full year subsidiary. So just copy the number as it is. No need to do any changes. Profit before tax, don't copy. Taxation, copy 96 plus 45. Profit for the year. Right. No need to copy, guys, that one because that we have to calculate and take. Okay, right. Now, guys, Roman number 1 is over. Now, guys, let's look at then Roman number 2. Right. Just have a look at that part, guys. Right. So, guys, what's happening? During the year, Saucer sold goods to plate for 150. Stop at that. One company sold goods to another company. So what do we call that adjustment, guys? We call that as intra-group sales and purchases. So what should we do? For one company, it's sale. Remove that from sales. For another company, it's purchases. So remove that from cost of sales. Are you guys okay with that part? Straightforward adjustment. For one company, it's sales, remove. For one company, it's purchases, remove from that also. Okay, now guys, here you have to keep track who sold to whom. Saucer sold to plate. Subsidiary sold it to the parent. By keeping a markup of 20%. So like I have said, you guys, always remember when there is a sale and purchase, definitely next adjustment is URP. So let's start calculating. It's a markup. Okay, use the equation. Markup means profit is 20%. Selling price we don't know. Cost is always 100%. So guys, if the cost is 100 and the profit is 20, selling price is 120%. Okay. Sold for 150, no? So guys, understand, sold for 150 means 150,000 is selling price. Divide this by 120%. So first understand, 150 is selling price, no? In my case, selling price is 120%. So put 120. I am looking for what? I am looking for profit. Profit is 20%. So therefore, guys, multiply this by 20 and see. Then what will be the answer? So therefore, guys, answer will be 150 divided by 120. That into 20. Answer is 25,000. So 25,000, guys, remember, is the profit. Multiply this by inventory held. 1/5 multiply by 1/5, answer is 5,000. So this is the URP once again. Yeah, very good. The profit is 25,000. Once we put the fraction, it will become 5,000. A little bit check and see, guys. Are you comfortable with the URP working? Because if you are comfortable with the working only, I can explain the double entry. I can explain you the theory part. Right. Check and see, guys, with the calculation part. Anyone is having any issues? Right. So that all okay. Right. Now, guys, let's move on to the next area. Now, the double entry. Okay. Now, guys, listen. If the subsidiary sells to parent, the double entry will be retained earning debit 70%. Why 70%? Because, guys, retained earning is the parent. Parent is 70%. Okay. Right. Next one. Right. NCI debit 30% and inventory credit the full thing. Right. So inventory, can you guys see here on red? I have written inventory gets credit by the full thing. No. So inventory credit means inventory reducing. Inventory is inside cost of sale, then cost of sale will increase. That's why we go to cost of sale and add 5,000. So like I said you earlier, doesn't matter who sold to whom. See, guys, earlier question, parent sold. What did we do? Added to cost of sale. Why? Because in the double entry, inventory becomes credit. Here, who is the seller? Subsidiary. Still, we are going and adding this to cost of sale. Why? Because the inventory gets credit here also. No, that's why we are going and adding it to cost of sale. So summarize your note. No matter who sells to whom, once we get the URP, cost of sale is always plus. Why is that? Because the inventory gets credited in both the situation. When parent is selling also inventory credit. When subsidiary is selling also inventory credit. Now, how about the other parts then? Retained earnings debit. Don't worry about this part. Retained earning debit, guys, we normally don't show it inside the income statement. Okay, then guys, next one. Right. Then on the other hand, NCI becomes debit by 30%. Guys, that NCI debit by 30% is there. No? That one we will be doing and showing it over here in the NCI profit working. So retain earnings debit by 70%. We don't do that because retain earning is in the SOFP. NCI debit by 30%, that we will be, guys, doing it inside this in the NCI profit part. Inventory becomes credit. We go and add it to the cost of sale. This is how the double entries work when subsidiary is the seller. Right. Now, guys, can little bit check and say, guys, are you comfortable with this part for the URP? Okay. Right. Then, guys, last adjustment of this paper, and then we will check and see. Yeah, sure. Why we are adding 5 inside cost of sale? That's because the reason is this. Now, when the subsidiary is selling to parent, inventory becomes credit, no? Okay. So, inventory means closing stock is credit. closing stock is credit means our closing stock is reducing, right? So when the closing stock reduces, what will happen is that our cost of sale is going to increase. Now over here, can you see when the inventory becomes credit, inventory is asset, no? When the asset becomes credit, assets are reducing. But unfortunately, closing stock is not there on the face of the income statement. Can you see closing stock is not there? Then you should think, okay, closing stock is not there, but closing stock is inside cost of sale, no? So you should then think, when my stock reduces, what happens to my cost of sale? So when the inventory becomes credit, closing stock is reducing. Closing stock is inside cost of sale, no? So when the stock reduces, our cost of sale will rise. So when the cost of sale is rising only, we are marking here plus 5 and showing, right? When the inventory becomes credit, inventory drops. When the inventory is dropping, cost of sale goes up. That only we are adding over here plus 5. Are you okay with that part on why we are adding the 5 to COS? Right. Okay. Right, then guys, let's move on to the next part then. Okay, now guys, can you have a look at this new adjustment guys over here? This was not there in the previous question. Right, go through guys this part and see. Roman number 3. Right, and also guys, remember when you go to Roman number 3, have a look at this date also. This date guys over here. Okay, now guys, start reading that one then. Right. So guys, what happened there? Roman number 3 on 1st of October 2004. So guys, keep it in mind. October 2004. Question is finishing in December 2004. That means guys, how many months are there? There are only 3 months. Got it guys? Only 3 months until we finish the question. Plate, who is the parent, made a 1 million loan to source. The interest is 6%. So first of all, guys, shall we calculate the interest guys faster? Okay. So 1 million loan, how much percentage guys interest? 6% of interest. Multiply this one by 6% interest. And guys, remember 6% is annually, no? So like I pointed out to you, have we taken the loan annually? No, no. We bought it in October or we took it in October. Question is finishing in December. That means only how many months? 3 months. Multiply by 3, divide by 12. Right, check and see guys then how much is going to be your loan interest. 1 million into 6%, that into 3 and divide that by 12. So therefore guys, answer is 15,000. Okay. Now, guys, this is a transaction that's happening between parent and subsidiary. So what do we do, guys, with these transactions? We have to eliminate them. So, guys, bottom line is that any trading transaction, any intra-group transaction that takes place must be eliminated from the books of accounts. Understood? Any intra-group transaction that takes place must be eliminated from the book. So just like how we eliminate this sale and purchase, like this one and this one we are eliminating, no? Like that, guys, this also should be eliminated. Now think and see in both point of view. Okay, now guys, see, Plate gave a loan. Understood? So parent is giving the loan means parent will get this interest. Interest received. So go to interest income and from there you eliminate income debit minus 15. Now, who is going to pay this loan? Who is going to pay the interest? Subsidiary. Paying the interest means interest expense. So go to interest expense. Interest is finance expense. Remove from that interest expense credit. Just like how you are removing sales and purchases. For one company, this is interest received. So remove this from interest income. For another company, guys, this is interest paid. Interest paid means expense. So remove that from finance expenses. So this is, guys, a type of a intra-group transaction. Now, don't worry. Now, this is there in my short note. Right? And there are two more situations in my short note. I will share the note in the group. You can go through that and, guys, study. So just think of the transaction, guys, in both parties' viewpoint. If you think of it that way, you know where and where they have marked. So you go and remove it from there. Simple. Just like the first one. For one company, we sell sales. For other company, buying purchases. So you eliminate. Like that, you think practically how will each party mark. And then, guys, you remove it and show. That's it. Okay. Now, guys, what we need to do, guys, we need to now total up everything. So I'm not going to waste time by calculating. You know how the calculation part is done. I'll just write the final answer here. So the final answer is going to be okay. So the final answer, guys, will be 392. But because I'm going to share this in the group, I will mark with the final answers. Then when you start studying, it's easy for you. 1500 plus 700 minus 150, 2050. Okay, over here, guys, 775 plus 370 minus 150 plus 5. Then, guys, gross profit will be 1050. Maybe a particular adjustment can come to MCQ, but normally consolidated income statement will come as task questions only. But like small areas can come for MCQ. Like for an example, they can ask, I'll do some MCQs today and show you. They can give like this paragraph, and they can ask what is the sale and purchases. Like that they can ask. Or maybe they give this paragraph and ask what is the cost of sale. Like that, small questions also could come. We will do and see after the break sample questions from the exam. Okay. Right. Then, guys, over here, 317 plus 135, 452. Right. This one, guys, 0. 60 plus 20 is 80. 80 minus 15, 65. Right. And over here, guys, now let's do PBT. 1050 minus 452 minus 65, 533. Then, guys, taxation, 96 plus 45 is 141. Yeah, 392, guys, correct answer. Now, guys, let's quickly calculate profit attributable to NCI. Okay, now, guys, look at this part. How to calculate NCI profit? Like this. Subsidiary profit after tax in the question. This is the question. This is the subsidiary. His profit after tax is 130. Right, 130 here. Into the NCI percentage. What's the NCI percentage, guys? 30%. No, NCI is 30. 130 into 30%. Answer is 39. Minus unrealized profit. Now, in this case, guys, we have the unrealized profit and subsidiary is seller. Can you see? Unrealized profit is 5, no, guys? Okay, who is the seller this time? Last time seller was parent. Then you can't write it here. Seller has to be subsidiary. In this case, yes, S sells to parent. Into the NCI percentage. Guys, what is the NCI percentage? Once again, 30%. So, guys, 30%, guys, will be then how much? 1.5. Subtract that. So once you subtract, guys, 1.5, answer will be 37.5. Bring 37.5 over here. Exactly. So now guys, from 37.5, when you subtract the group profit part guys over there, 392 minus 37.5, answer is guys 354.5. That's your answer. Yeah, that's your group profit. Oh, sorry, parent profit. Right. Now guys, shall we quickly go through the question and see guys over there? Wait, yeah, correct. Wait, you got 25. Yeah, 25 is the profit. Okay, not that you're wrong, you're correct actually. 25 you got, no, that 25 is profit. Now, normally when you get URP, can you see the URP is equal to profit into the inventory held. 25,000 is correct. That's the profit. Now, we are not looking at profit. No, we are looking at what? Unrealized. Unrealized means how much of stock is remaining. So the question said 1/5 is remaining. No. So from 25,000, we have to see another one time 1/5. That's how I got the 5,000. Your answer is correct. Only thing you need to multiply your answer with the inventory held proportion. So inventory held is 1/5. So once you put 1/5, you will get the answer. Got it, no? Right. Okay. Now, guys, let's check and see what the examiner is asking now from this paper. Okay. Now, guys, look at this part. Let's see what they are asking. Okay. So first question, guys, now he's asking from you once again, same story, revenue. So revenue, you will copy this in the exam. Cost of sale, item number 1. Okay, let's go to now item number 1 and see, guys, what is this item number 1? Let's check and see. Okay. So over here, guys, item number 1, let's select the correct option. 775 plus 370 minus 150 plus 5. 775 plus 370 minus 150 plus 5. Option number 2 should be the correct answer. Right, gross profit NA, no need to calculate, not applicable. Administration expenses, just copy this for the exam. Operating profit, no need. Interest guys, 0. Right, finance cost, item number 2, 60 plus 20 minus 15. 60 plus 20, then guys, answer has to be this. Okay. Why the answer is this, guys? See, 60 plus 20, everything has 60 plus 20. No, so this is 60 minus. So this can't be the answer. 60 plus 20. How did, guys, we get 15? We took 1,000 loan. We put 6%, that into 3 over 12. That's why this is the answer. Okay. Right. Profit before tax, no need. Taxation, you just copy this one. Profit for the year is not needed. Non-controlling interest, item number 3. Let's select that one also, guys, faster. What will then be item number 3? Again, guys, can you see here? Again, what they are asking? They are simply asking for the formula. That's it. They're not asking you to calculate. They're asking the formula. So what's the formula, guys, that we use? Subsidiary PAT, profit after tax, profit before tax. This can't be the answer. Okay. So profit after tax is okay. Now, guys, see, unrealized profit, we are deducting. So here only deducting. So this should be the correct answer. This is adding, no? So this is the incorrect one. Right. So this is what, guys, you should do when it comes to consolidated income statement. Okay. Right. So we'll do a short MCQ and then we'll go for the break and then we'll practice more MCQs. Okay, right. So, guys, little bit check and see, guys, from this question, what I have done. Do you have any doubts? Anything that you want to ask me, guys? Okay, no guys. So looks good, right? Can you guys just try this question, guys, before we go for the break? Right. So I'll copy the question here. And it's easy for you to do. This is the adjustment. Okay. Right. And this is the group structure. And don't worry, guys, it's a one full year subsidiary. Yeah. Because, guys, see, October 2007, September 2008, perfectly 1 year. So you don't have to worry about the number of months. Okay. So on the other hand, and also this piece of information. Okay, guys, shall we do a small work like this, guys? Now it's 7:25. So shall we take the break? Then we can pray and then we'll resume after that. Okay, so now it's 7:25, guys. You have a 20-minute break and then we'll resume after that. This MCQ we'll do after the break. Okay. Okay, right. So guys, then let's resume after the break. So I have copy pasted and given for you a question from the revision kit. Can you guys little bit try to attempt guys this question over here? So this is the information what they have given to you. So guys, by using this adjustment, can you guys help me select the answers for these two questions what they have asked here? So this is also guys the same adjustment only what we discussed. One company is selling to another company. Okay. And then, 1/4 of these is remaining inside the inventory. So this is the adjustment. It's an intra-group sale and purchase followed with a URP. So you think and see guys how you will adjust these on sales and cost of sale, and then guys select the correct answer. That's what guys you have to do. Okay, so I'll give you 2 more minutes and then I will explain the question. Okay, right. So guys, now I'll explain the question in case you were not able to get the answer. Now guys, see, sales by S to P during the year were 6 million. So guys, remember when one company sells to another company, what should we do? From one company sales, you subtract. So I'll write here minus 6 million. Then guys, from another company's purchases, we have to subtract. So guys, purchases is inside cost of sale. So you reduce it from there, minus 6,000. Okay. So for one company, it's sales. So you remove this from sales. For the other company, guys, this is cost of sales. So you remove it from cost of sales, minus. Done. Right. Now guys, going further. Shov made a markup of 20% on these sales. 1/4 remained inside the inventory. Okay, now guys, it's time to calculate URP. Okay, so usually guys, how do we calculate URP? Okay, put down the equation. URP is equal to profit into inventory held. That's the equation, no guys? Profit into inventory held. So therefore guys, point number 1, profit, that I have to calculate separately. Right, inventory held here guys, 1/4 is still there inside the inventory. So divide this by guys 1/4. Okay. Now guys, when you divide this by 1/4, now let's check and see then the profit. So the equation is normally profit equals selling price minus cost. So this is also guys a markup. Markup means profit is 20%. Cost is 100%. Therefore, the missing number inside this profit is 20, cost is 100 means in the middle guys there's a number missing. No, that has to be 120%. Right. Okay. Now guys, they are telling sales is 6 million. So sales means that's the selling price. So selling price is 120%. I am looking for 20%. So that means guys, my URP will be 6,000 divided by 120. That into 20 guys, answer is 1,000. So 1,000 is the profit. Multiply 1,000 into 1/4. Answer guys will be 250. That's the URP. Right. Then guys, what I have taught and given you all, no matter who sells to whom, subsidiary can sell to parent, parent can sell to subsidiary. It doesn't matter whom. When you get the URP, what you have to do, guys? You should always add it to cost of sale. So go to cost of sale and there, guys, you mark and show there plus 250. So guys, based on this, your answer should be 85,000 plus 42,000 minus 6,000. Option number 1 for revenue. For cost of sale, 63 plus 32 minus 6 plus 250. 63 plus 32 minus 6 and plus 250, which is option number 3. That's the answer, guys, for this MCQ 2 questions what they have given. That little bit check and see, guys, are you okay with the answers what I have got? Any doubts that you have, guys, to clarify? Okay. Cost of sale, which one? How I got the answer, or is it this one? Meaning, wait, 1 minute. Let me check your doubt exactly. Is it the 6,000 or the 250 or the selection part? Which one? The 250, right? The 250, I got it through this one, the URP calculation. Okay. This 250 over here, right? If I'm to like quickly go through that one more time, it's like this, right? So Normally, how to calculate URP? It's profit into inventory held. Okay. So profit into inventory held in this question, inventory held is basically how much is still left inside the warehouse. So they are telling 1/4 of these goods remained in the inventory. So you take over here 1/4. Done. That's how I got the 1/4. Now I need to calculate my profit. So how to calculate my profit? That's the working what I have done here. So always remember profit equals selling price minus cost. Right. So there are two policies in the exam. One is a markup and the other one is a margin. In our paper, they are using a markup. So markup is 20% means the profit is 20%. Because they are using a markup, the cost is always 100%. That's a constant factor. That's not changing. Remember, if it's a margin, selling price is 100%. If it's a markup, cost is 100%. So in my case, if the profit is 20% that they have given here, so because it's a markup, my cost is 100%. Can you see? Because if it's markup, cost is the 100% factor. Now find how much is missing. From something, if you reduce 100, the balance is 20. That means selling price is represented by 120%. Now 120% is selling price, no? Apply. Our sales is 6 million. 6 million is represented by 120. So I divided that by 120. I am looking for profit. No, so profit is 20%. So multiply by 20, you will get 1000. That's your profit. Put it into inventory held. Then you will get your URP. URP always is added to cost of sale because inventory gets credited in the double entry. So therefore, we added that to cost of sale. Check and see, are you okay with the 250 part? If you're still having doubts, tell me. I can go through it one more time. Okay, no, right. Don't worry, guys. Do more questions and see. Okay, so I think with this one, task questions we have done. If I'm not wrong, when it comes to the income statement, let us just quickly double check and see, is there any other task question that we can do? Okay, so guys, over here, there is a good question. Right. This one. I'll copy paste this, guys. We'll try this and see. Guys, my worksheet, this document, I will share it tomorrow. Try this question, guys, here. Very good one. Can you guys just calculate and give me? Okay. So guys, what I want you to do is, can you guys calculate and give me sales and cost of sales in this question? Okay. Calculate revenue and cost of sales. Okay, so guys, we'll go like this now, step by step. First of all, guys, can you quickly understand the group structure? Can you decide that one, guys, first? I want you to first read this, okay? And then read this. Can you guys, first of all, make up the group structure? Who bought whom? What percentage? How many months? Or whatever. Can you guys quickly decide that part? First of all, guys, I'll give you 2 minutes. Okay, done, guys. So have you all guys set up the group structure, guys, in the first place? Okay, so if you're having difficulties, okay, look at this one, guys. Hyde acquired 3 million shares when Seek had 4 million shares. Okay, so what happened, guys, over here? Hyde acquired 3 million out of the 4 million shares. So therefore, guys, now what you should do, can you calculate, guys, this as a percentage? That's how you're going to understand how many shares, how many percentage they bought. See, Seek has 4 million shares. Out of the 4 million, Hyde bought 3 million. So calculating Seek is as a percentage and how much he bought. 3 million over 4 million into 100%, guys, he bought how much percent? He bought 75% of the company he acquired. That means there is a 25% NCI. And this is a, if I'm not wrong, guys, now look at this. They bought it on April 6. This is June 6. Now count April, May, June. That means only for 3 months. So therefore, guys, this will become a 3-month subsidiary. Are you guys okay with this part of the question? Little bit check and see, guys. They bought 3 out of the 4 million. So as a percentage, they bought 75% in that case. So if you buy 75, 25% is left. Now look at the date. April to June, this year there is only 3 months. Okay, so because there is only 3 months, we label it as obviously a 3-month subsidiary. Right. Okay. Now, guys, can you read this paragraph for me and try to do revenue and cost of sale? Not easy. This adjustment, guys, over here is not an easy one. So think carefully and try to do this one, guys, on your own. I'll explain after that, but little bit of a tough one. Okay, I'll give you a small hint because I don't want you to make a mistake. Okay, right. Guys, read the first paragraph and see. During the post-acquisition period, Seek sold goods to Hyde. The goods costed 10 million. This is the catch of this question. Guys, listen. In all the other questions that we did today, how many questions we did? 3. In the 3 questions what we did, they always said the selling price. You understand? They always said this was sold for this much. Then our work is easier. But guys, now can you see here, they are not telling the selling price. The goods costed 10 million. This is the cost of the goods. It's not the selling price. They are not telling for how much they sold it. So I will tell you, when you do this adjustment, first figure out the selling price. For how much did they sell this? Figure out that. Once you figure that out, then it will be like the normal thing. So understand, guys, the difference. In the earlier three questions, they said parent sold to subsidiary or subsidiary sold to parent. They gave the selling price. Then only we can do intra-group sales and purchase. Here, the selling price is not given. This is the cost of the product. So I want you to work out what's the selling price. After that, you do the adjustments like normal. Right now, guys, can you little bit try and see whether you are able to do this one? Okay, right. Now, guys, if you're having trouble figuring out the selling price, okay, I'll guys show you how you're going to do that. Then at least try to do the adjustment, guys, over there. Okay, right. So, guys, it's done like this. Okay, so number one. Okay, now usually, guys, profit equals selling price minus cost. Right. Now, guys, in our question, they were sold at a markup of 25%. So markup means that's the profit percentage. So profit is 25%. So guys, remember markup. Markup means who is always 100%? Who, guys? Cost. Cost is always 100%. Right. That means, guys, selling price then should be how much percent? Selling price should be 125%, the missing figure. Okay. Now see, the goods costed 10 million. Okay. So guys, 10 million is the cost. Okay. So if 10 million is the cost, now guys, put on this one, guys, fast and see then how much is the profit. Okay. 10 million is the cost. Okay. So if 10 million, guys, is the cost and the profit, see on this one, 10,000 into 25%. So guys, then what will be the profit? Profit will be then 2,500. Correct or wrong, guys? That's the profit, no? So then now find how much is missing in the middle. If cost is 10,000 and the profit is 2.5 million, selling price has to be 12.5 million rupees. This is the selling price. Okay, guys, now that you know the selling price, now work it out. Okay, now selling price is 12.5 million. Wait, before I explain it further, can you guys check and see, are you okay with how I got 12.5 million in my question? Any doubts, guys? Little bit check and let me know. Okay, no, guys, so no doubt at all, no. Right. Okay, now what do, guys, once you have 12.5 million, this is the price, this is the sales. Now try to do the question. Now, what did I ask you, guys? I wanted you to do revenue. So normally, guys, how to do revenue? Take the parent revenue, add the subsidiary revenue, but to be careful. This is a how many months subsidiary? This is a 3 months. And guys, answer now remove 12.5 million because, guys, is intra-group sales cost of sale. How to do cost of sale, guys? Take the parent cost of sale, add the subsidiary cost of sale, and subsidiary is how many months? 3 months. And for other companies purchases, so you remove this from cost of sale. So once you get the selling price, for one company it is sales, one company is purchase, you eliminate. Once you are, guys, done with that part, now you do the URP. Okay, so normally, guys, how to do URP? It's like this. URP is profit into inventory held. Okay, now, guys, our work is easy. All we know the profit now, guys, million. Inventory, read this. Hyde had sold 60%. Now, think carefully, guys. 60% is already sold. Are we looking for the sold one? No, we want the 60% sold means how held? 40%. Guys, now check 40% answer. Million into 40%, guys, answer will be 1,000. Add it to cost of sale. Exactly. So therefore, guys, can you add this So that's how, guys, I have got my URP. My connection is a little bit laggy, no, guys. Yeah, wait, I'll switch to hotspot. Okay, so guys, little bit check and see, guys. I think now I switched to hotspot. It has to be okay now. Okay, that 1,000 rupees, guys, how I got the answer, and I'm adding that to cost of sale. Are you guys okay with that part, guys? Little bit check and see. Yeah, sure. Right. So normally how you calculate the URP, it's like this, guys. To calculate the URP, we normally, guys, go for this equation, no, right? Profit into inventory held. So profit, guys, we have already calculated that to be, guys, 2,500, no? Okay. From when we are trying to find our sales, we already calculate profit to be 2.5 million. That only, guys, I have copied it here. That one, guys, you multiply by 40%. So from where did I get 40%, guys? Inventory held. Hyde sold 60% of the goods. So from whatever that Hyde bought, he was, guys, able to sell 60%. So when he sells 60%, how much is left inside the warehouse? 40%. That's how, guys, I got 40% here. So profit into 40%, guys, I got 1,000. 1,000 is my URP. No matter who sells to whom, URP is always what, guys? Added to cost of sale. So that's why, guys, over here, I have added this to my cost of sale as 1 million. This is how you have to do the URP. Right. So, guys, since my connection was unstable at that point, now, guys, can you see, are you all okay with the URP adjustment? Done. Okay. So guys, I think if I'm not wrong, all the task related questions from my exam kit I have done with you all, guys, related to the income statement. Let's check and see, are there any other small MCQs that we can do? Okay. So guys, this is from the SOFP actually. Okay. Can you guys little bit try guys this particular question? This is actually from last class work. Okay, this one. This question guys over here. So this is guys related to fair value adjustments of property. This is from last week. This is not income statement, guys. This is SOFP. Okay, just try and see, guys, this one. Okay, right. So guys, in case you have forgotten how to do this one, now guys, first of all, they're asking non-current assets. Now in my question, guys, the only non-current assets that I can see is none other than guys, property, plant and equipment, right? So this is the non-current asset that I can see. So therefore, guys, normally property, plant and equipment is an asset, right? So how do we adjust it? Take the parent answer. Okay, so take the parent answer. Add that with the subsidiary answer. So subsidiary answer is guys 2.2 million. Okay. Then normally guys for PPE, we do guys what adjustment? We do fair value adjustment. Here guys on October, the fair value of a land was 400,000 greater. One land has gone up by 400,000. So normally guys, when there is a fair value adjustment, what we do? When there is a fair value adjustment, we first copy that in working number 2, net asset of subsidiary. And then we add to PPE, debit PPE. So therefore, guys, PPE should be added by 400,000. Now, guys, when you do this one, answer will be 4.4 million rupees, which is option B. This is the correct answer. Simple as that. Take the parent one, add it with the subsidiary one, do your fair value adjustment, guys, and then you will be able to get your answer. Okay, so that's how we have answered it. Easy question. Only thing you need to know how to do the fair value adjustment. So guys, go through the short note. I shared it last Tuesday, right? So you should be able to. Okay, let's check and see, guys, is there another one question from MCQ that we can do? Okay. Guys, over here, they are asking you to calculate goodwill. Okay, they are guys asking you to calculate goodwill. Can you guys little bit check and see whether you're able to do that part, right? Calculating goodwill. This question, huh? Can you try this one, guys, over here? Goodwill. So guys, I have given you the goodwill formula. Try to guys substitute the numbers to this formula, then you will be able to find your answer easily. Right. So guys, shall I explain how to do the goodwill part? Okay. Now guys, see, first of all, to do the goodwill, we need something called, guys, investment. Right. Check the investment, guys. On 1st of January 2014, Yogi acquired 80% for 1.4 million. Then guys, this will become the investment, 1.4 million rupees. At that date, the share capital consists of 600,000 shares at 50 cents. Okay, now guys, see, Share capital of B is needed for this working number 2. Net assets at acquisition. Guys, I taught you last week, no, what is net asset, guys? Net asset means equity. Share capital is part of equity, no? So we need that one, guys, over here. Share capital, right? How many shares, guys? 600,000 shares at 50 cents. That means, guys, the answer will be 300,000. Its reserves were 50. Reserve means retained earnings. So retained earning is also, guys, part of equity, no? So I'll write it here, reserves. That is how much the reserves were. Right, 50,000 it seems when you are acquiring the company. That, right. The fair value of the non-controlling interest. So normally, guys, fair value of non-controlling interest, we should write it here, 525,000. That's it. Okay. So first of all, guys, when you add these two, answer will be, guys, 300,000 rupees. Right now, guys, can you work out and see what's going to be the goodwill? So therefore, guys, 1.4 million plus 525,000 minus 350,000, answer is 1575. So therefore, guys, it has to be option A should be the answer. So here, guys, you need to know what's the formula for goodwill. This one and this one is easy. This working out the equity at the acquisition date a little bit tough in this question. So this is how we are going to do and get the answer. Can you guys that little bit check and see, guess any clarifications from this question? Okay. If not, can you guys start this particular MCQ, guys, for me over here? This one, post. If you are okay, if you have a doubt, send it over. I will explain. If you don't have a doubt, guys, you are free to start, guys, this question. So in this question, what are they asking? What amount should appear for group reserve? Group reserve means they are, guys, asking from you this one. Working number 4. Consolidated retained earnings. So I have given you the equation. Normally inside consolidated retained earnings, these are the 3 things that comes for FA. Can you guys now search for these 3 things and try to find the answer if possible? Okay, right. Let's discuss, guys, this question also quickly. On 1st of January 2018, which is several years ago, because this question is for 2009, Tom acquired 80% of the share capital for 100,000. So this is the investment. This one, guys, I don't need it for any of my equation here. At that date, the share capital consisted of 50,000 ordinary share and the reserves were 300,000. Now, this is, guys, something to keep note of. Okay. So when Tom is buying Jerry, the reserves of the subsidiary were 330,000. On 31st of December 2009, the reserves of Tom and Jerry has been given below. Tom 400,000. Now, guys, Tom is the parent, no? So parent retained earnings, I should take it over here, 400,000. Jerry is 50. Guys, this is, we need it for this one, post-acquisition reserve. Now, what is post-acquisition reserve, guys? From the time that you bought the subsidiary to the time that you are preparing the question, how much has the reserve gone up by? So, guys, the reserve has gone up by how much? 20,000 rupees it has gone up. But, guys, question, are you entitled to take the entire lot of it, guys? No, no. Sorry. Though the reserve has gone up by 20,000, you as the parent is not entitled to the entire thing. You're only entitled to how much? 80% of it. So therefore, guys, see only 80% of this. Then the answer will be 16. Doesn't seem like, guys, there is a URP. So therefore, guys, final answer 416,000. This should be the correct answer. Okay, can you guys little bit go through and say, guys, are you okay with how I got 416,000? That 20,000, guys, is post-acquisition. Now, from the day that you bought to the day that you are doing the question, Jerry's reserves has gone up by 20,000. Okay, right. So, guys, then that part is also done. Let's move, let's go down and see, is there any other calculation, guys, that we need to do? Okay, so guys, same kind of question. Okay, same kind of question. But guys, they're asking now this time for you to calculate the value of NCI. Okay, I have, guys, given you the equation. Can you guys little bit try and see? I think this should be the last question for today. Right. So go through this question. They're asking the value of NCI. Can you guys little bit try to do? I have given you the equation, substitute the numbers and try to get me, guys, the fair value of NCI. Okay, right. Done, guys. Same type of question, but different values they have given. Okay. Now, guys, to calculate the NCI, what's the first thing that you need? Fair value of NCI. Now, guys, go through the question and see what's the fair value of NCI. They would have given it somewhere. Here, guys, at the date of the acquisition, fair value of the non-controlling interest, 25,000. First mark that one, guys, over there, 25,000. Then what you need? Post-acquisition reserve. First, check and see, guys, when you are buying the company, how much is the reserve? On 1st January, Gary acquired 60% of B for 35. This is investment. This is how much you paid to buy the company, right? So this is the investment. At the date, the share capital of B consisted of 20,000 ordinary shares, not really necessary. Its reserves were 10,000. Now, guys, see, when you are buying the company, reserve is 10. When you're preparing the financial statement, the reserve is 15. That means, guys, it has gone up by how much? It has gone up by 5,000. Right. Now, guys, what are you calculating? You're calculating NCI. Then what is the NCI percentage in this question? NCI percentage is 40%. No, guys, because see, they bought 60%, right? So 40% is remaining. So 5,000 into 40%, guys, answer will be 2,000. There is no URP. So 25 plus 2,000, guys, answer will be 27,000. So therefore, guys, answer has to be option A. Sorry, not option A, option B. Simple as that. Okay, right. So guys, then with that one, then I will then conclude, guys, today's session. So consolidated income statement is also done. Let's check and see, guys, what's the plan for next week, because all the major areas are touched upon. Maybe, if possible, we'll try to go through a paper and try to discuss a few questions through that, a mock or a model paper. We'll try and see if possible. All right, guys. So that's it then for today. So again, guys, I'll see you all then next Monday at the same time. We'll see what's the plan for next week. All right, guys. Welcome then. All right, guys. Welcome. Bye.